Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. I wanted to record the daily financial news for Saturday, December 17th. So, what we were talking about on Saturday, December 7th, sorry, let me try that again. Saturday, December 17th. First thing I read about is good old Jeremy Siegel. Jeremy Siegel is out and about talking about inflation crashing, inflation, deflation, all of these things, talking about the Fed cutting in the summer. Kind of 5 bullet points from an interview that I watched and read about. One is he's actually saying inflation is over, and that inflation will go negative very soon. He expects the tough talk on the labor market is actually already cracking. He expects the unemployment rate to start to go up noticeably, new unemployment claims to go up noticeably as soon as the first of the year, which is, of course, right around the corner. He does think that the Fed will cut rates by the summer in the first half. So, by my calculation, that is as late as June. He's saying that the stocks have seen their lows. Okay, we shall see. And again, he's calling out there is so much bearishness and so much negativity that all he sees is opportunity. Again, I think this is interesting. Jeremy, Elon Musk, Cathie Wood, who else? There's other folks on that side of the fence that basically says the Fed needs to cut. I wonder what's going on with Jeremy, right? Elon Musk, I get, right? He sells cars. Cathie Wood, I get it. She has unprofitable companies. Billionaire Barry, I get. He suddenly has a bankruptcy and he's stopping distributions. But what about Jeremy? I wonder if Jeremy is on the board of some companies that are struggling. Maybe he's got an ETF or something. I have no idea, or maybe he just likes being on TV. Maybe it's just that simple. He's Dr. Doom's got his thing. Peter Schiff's got his thing. Maybe this is Jeremy Siegel's thing. I don't know. It will be very, very interesting to see. I don't know if you watch the All In podcast, or I should say listen to it. It is something I listen to every week. And I have to agree. One of the things they talked about was SaaS companies and software SaaS. And if you don't know my background, I spent 20 plus years in software. The last, I don't know, 5 or 6 years in SaaS business, or at least business units, right? Companies, maybe the company still had some perpetual, but was moving to SaaS. And I've been through a down cycle. If you are in software sales, frankly, if you work at a SaaS company, woo, it's going to get rough. New logo acquisition. First off, if you're a sales rep and you have a quota, usually what happens is quota goes up and accounts go down, right? Right around the corner. January 1st is like, what is it? 2 weeks away. It's going to be rough. I would expect 90 some odd % of sales reps to miss, right? New logos are going to be hard to acquire. You're going to have logo churn. You as a sales team, you as a professional service, you as, service, support. Sorry, support. You're going to struggle just to keep clients. The amount of logo churn is going to be amazing. In fact, one of the things that I would be running as a sales leader is a replacement campaign, right? One of the things you will undoubtedly see at your customers is they got 3 of everything. So one of the plays that is going to be happening very soon is, hey, dump those 2, buy mine. Let me show you how if you buy my stuff, you can cancel that maintenance agreement, and it doesn't cost you any money. Such an easy play. Hard. And then finally, a lot of business has been done add-on. It's called farming. Hey, how many more seats do you want? Your company's bigger. You got 100, you need 150. Great. Easy sale. Farming easy. It's not going to be there, folks. You're going to actually have to fight to keep your current seats. In fact, one of the things that your customers are going to do is go, hey, I've got 100. I'm paying maintenance on 100. I only need 65. I want to cancel maintenance on 35. In fact, I want a credit of something. Oh, it's going to be bad. The next year in sales, rough. Some of the most ugly, hard, difficult conversations. And let's be clear, when sales struggle, engineering, products, services suffer. It is going to be rough. And I've been through 2 of these. They suck, and I'm so glad I'm not in it again. Yucky, 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 yucky. One of the things I think is very important about real estate in the next year is only the good operators are going to win. Only the good operators. Only like Omar and I talked for 18 months about how easy it was to do lipstick flips. Only the good operators are going to win. And most people are going to lose money. In fact, I'll probably do a video after this showing you exactly what I mean. But yeah, it's going to be bad out there. And yeah, but you know what you should take from this is if you follow one rental at a time, more specifically the course, How to Get Started One Rental at a Time, it is focused on doing the work. Get a buy box. Look at it every day. Only do great deals. Network. Grow your network. Audit your network. Well, I focus on operations. In fact, my story over the last 2 years probably wasn't very sexy because, hey, it's easier to do Airbnb and arbitrage and, you know, do this or do that. My story of doing the work the last 2 years, not sexy. My story of doing the work the next 2 years is going to save your ass. Doing the work and only doing great deals for the next 2 years is going to be amazing. And we are going to be able to strike when others can't. In fact, I will be sharing numbers on my first flip, which I listed on Wednesday, and we already have offers. We will talk about that on Monday during the hub call. So again, good operators win. People who gamble, get cocky, don't focus on execution. Bad, 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 bad. San Francisco, big trouble. Specifically, office. Office is in trouble. You know, San Francisco's office occupancy today, it was reported at 39%. 39%. There are going to be some office buildings that go back to the bank. High rises, San Francisco, 2-bedroom, 1-bath condos, high-end condos, down 16.5%. Crazy. It is funny to talk about the housing market in general. Those that follow my channel know I have a bet, a dollar bet, a friendly dollar bet, or a wager with several known economists. And it looks like I'm going to collect. Housing listings are down from last year. There are 2,000 less listings today than last year. And new home listings are down 22%. Record demand destruction, record supply destruction. We're going to go sub 4 million transactions next year. It is going to be interesting. Got some updates on Opendoor in Miami. Shout out Marvin. Marvin on Instagram sent me this. Thanks, Marvin. Opendoor listings in Miami. 109 listings. Average list price cut 35 grand. Range of cuts 5 grand to $116,000. Folks, the housing market in some cities is going to look ugly until iBuyers are gone. I can only imagine what these numbers would be in Phoenix. I bet you there's still 1,000 Opendoor listings in Phoenix. Probably horrible price reductions. I'm sure Opendoor is losing their ass on most properties. We just got to get through it. We got to get back to a normal market. Yeah, there are some markets that have real pain, but again, I don't think that is a country thing. At the end of the day, I am excited because the next 2 years are for you and me. If you watch my channel, and certainly if you watch my channel most days, you will know I'm focused on operations and execution, not luck, not gambling, not appreciation. Must cash flow day one. Good or great operators are going to win. And yeah, it's going to be a very interesting time. And if you know anything about it, I do have these cards that I look out. I have these golden tickets for anybody that gets their first deal, and then these black cards for your next deal. I look forward to sending out at least 1,000 of the black cards and 100 of the gold cards. So have an amazing day, folks. That is the update for Saturday, December 17th. Thank you so much.